The king is dead, long live the king. Well, he's not dead yet, of course, but he is on his way out of the Bank of England, and he's going out with a bang. Governor Mervyn King, one of three policymakers voting for more bond buying stimulus. The pound tanks and the FTSE soars. I'm Jamie McGeever, and this is today's Market Pulse. So the latest BoE minutes, which also showed a rate cut was discussed, are a bombshell today for UK markets. The FTSE rises to fresh five-year highs this morning, and traders say breaching the key psychological barrier of 6,400 could signal even bigger moves higher. The last time the FTSE was at these heady heights was back in January 2008. Of course, that was pre-Lehman, and it was also pre-Bear Stearns. Well, I'm joined now by Robert Wood. He's UK economist at Berenberg Bank in London. Rob, let's start with the outlook for UK assets and the FTSE. If we do go above 6,400, where's the next stop?
Well, the minutes today were obviously extremely dovish, with 6-3 vote against more QE, Mervyn King and Paul Fisher joining David Miles in voting for more QE. To be honest, I would rule out a further interest rate cut, but it does look like further monetary stimulus is on the way, which will be supportive. So
higher FTSE, probably higher stocks, but the flip side of that, of course, is a lower pound. The pound's been battered today again, but you're still quite bearish on it.
Yes, we are. Yeah, I don't think the fall in sterling is at all unwarranted, actually, with monetary policy likely to remain very stimulative, with interest rates likely to remain low for, frankly, years, and the ECB looking a bit more hawkish. Tail risks in the Eurozone receding a bit, then safe haven flows reversing, weak monetary policy. I think further falls in sterling are likely. Against
the dollar back in 2009, if I'm not mistaken, it fell down to what, 138?
That's right.
Is that a target?
I'm not sure I'd call it a target. I wouldn't think it would go that low, but certainly lower from where it is here.
Okay, so that's the equities and the foreign exchanges. Now, what about the bond market? It seems a little bit harder to call.
Yeah, I think that's right, because you've got the Bank of England essentially committing to keep interest rates low for the foreseeable future, even if inflation runs above target. So no interest rate increases coming, at least until 2015. We think 2016. But yeah, inflation, as I say, is likely to run above 2%, probably peak above 3% this year. So you've got forces pushing in both directions.
All this central bank stimulus, it's obviously seen a sharp move lower in the pound. That's not done much good for the UK economy, has it? The trade balance is still pretty dire. There's no growth.
I'd have to disagree with you there a bit. I think the fall in sterling originally did do quite a lot to the trade balance. So it fell by more than half from before the crisis to mid-2011. That was until the Eurozone crisis really kicked off in the summer towards the end of 2011 and then through the summer of 2012. Sterling appreciated, exports to the Eurozone fell, and I think that really harmed the trade balance. So further falls in sterling should help. Let's keep it in perspective. The effective exchange rate is down not more than 5% over the past couple of months. Obviously a lot more against the euro, but less against the dollar. So I think it'll help a bit. But that's one reason why we think sterling probably has further to go. The UK's running a current account deficit of 3.4% of GDP, which clearly isn't sustainable in the long run.
OK, Robert, thank you very much. That was Robert Wood at Berenberg Bank. Well, gold, the focus of today's chart point. Prices falling to a fresh 6-month low this morning, below $1,600 an ounce, as appetite for riskier assets gains momentum. Having broken key technical support at 1,600, traders say the precious metal is now vulnerable to further losses with the next downside targets at 1,589 and 1,564. Gold in euro terms today is lowest in 14 months. Finally, on this day in 1959, less than 3 years after breaking the 500 mark, the Dow Jones Industrial Average closed above 600 for the first time, ending the day at 602.21 points. The Dow will start today at 14,035, just 0.9% away from a record high. With the Fed's printing press still at full pelt, it's surely only a matter of time. That's it for today's Market Pulse. I'm Jamie McGeever. This is Reuters.